Hello and welcome to this video. In this video, we're going to talk about the world of multi-currency. Now, is your business doing really well and thinking about going over to outside the UK to start buying and selling in other markets? Now, personally, that sounds like a business that isn't just surviving, but thriving, which is exactly the motto that us at Boffix have. And that's exactly what we encourage our clients and what our businesses want to go out there and do. Now, if that's the case, then this video is all for you, because what we're going to talk about is some maybe practical issues around actually going out there and getting yourself into selling to other places. But also we're going to talk about what that means for your account and some of the complications that come through it. Now, thankfully, most of that complications can happen and can be done via software, which we're going to have a look at. And if you wanted someone like ourselves to do it for you, we're experts in this field and we can make sure it's clean and tidy. But there is some complications you need to be aware of, and that's what we're going to talk about today. So my name is Aaron Patrick, and I'm about to show you all about multi-currency. Let's go. Hello, my name is Aaron Patrick. I'm a chartered accountant, a certified UK trainer with a fancy new logo, that QuickBooks chap on the internet, and also head of accounts here at Boffix. Now, for today's video, we're going to be talking about multi-currency, as I said in the intro, and it's a really complex topic. So feel free with this particular video to take it in chunks, go back, rewind, all that sort of stuff, because this could be one where you might want to keep referring back to just to understand exactly what's going on. Now, over on my other channel, Aaron Patrick, the QuickBooks chap, we did talk about how software can make multi-currency really, really simple for you. And actually, some of these items we're going to go through today can actually be really, really simplified by doing that. So do look out for that video if you are looking from a kind of practical point and everything else. But if you're looking for the theory behind it and also some tips and tricks, then this video is also going to work well for you. Okay, so the first tip that we've got for you is basically making it really easy for you to deal with multi-currency. Now, traditionally, when it came to banking and everything else, it was actually quite tricky to deal with multi-currency because your traditional high street banks can sometimes be a little bit restrictive in the way they deal with sending money abroad and everything else. Now, in this day and age, the banks are actually a lot more forgiving. So creating a foreign currency account, for example, is actually a bit more simplified than before. But even better than that, we now have a whole access to more options than we've ever had. And when you think about what we would call our challenger bank, so we use Starling banks and all those ones, they actually make it so much easier for you. In fact, with only a couple of clicks, you can find yourself actually having multiple different currencies available, which is going to make your life easier with dealing with actually sending money to different currencies and pushing it over. You could have different pots of money, if you like, in different currencies. That makes it really easy to make payments and receive money and not have to worry about the fact that you could be at risk when you're dealing with multi-currency. See, the risk is that you're actually subject to actually having currencies fluctuating, which means that you could end up either gaining or losing quite substantially, depending on how the market is going with those particular currencies. So that's why historically it's been so difficult. Also, you have lots and lots of payment gateways these days from the likes of PayPal, Stripe, those sort of things, which actually makes dealing with multi-currency really, really straightforward. Now, there are a lot of tax implications relating to it as well, and we will do a separate video on that, including VAT, and even potentially actually having to pay taxes in other countries. So we'll leave the tax side of it for now, and let's just talk about the theory and everything else that goes with it. So that's tip number one, about the practicality and how easy it is now. Use our links below. We've got links to Starling, Revolut, and now we have connection with PayPal. And remember also, we have the option for you to get a very cheap version of QuickBooks Online in our links below. So just explore some of those links for ways in which you can actually help yourself getting into that multi-currency world, making yourself easier. But the next bit I want to talk about is that theory of that risk. So we mentioned the fact that dealing with multi-currency is a risky area, but now I want to talk about how HMRC Companies House want you to present that risk if you're doing a set of statutory accounts, for example, or you're doing a tax return, how they want you to mitigate against that. And that's what we're going to turn on to now. So first of all, as a practical point of view, again, do look at the video I did over on the QuickBooks chat channel, but this here in front of me, you can see that this is where we're talking about. So we've got what's called an unrealized gain or loss just here, £28.62, and exchange gain or loss, £75.11, meaning that this is my profit and loss account for this particular period, meaning that this net income figure here has been affected by these two numbers. Now I know in this particular case those numbers aren't very big, so probably not something to worry about too much, but obviously if those numbers were a bit much bigger or your net income was a lot lower, then it could be a significant effect. And it's all about the term materiality. You see, from our point of view, we need to be making sure that materiality of an item is being considered. So is it material enough to actually drastically affect the account, yes or no? And in this case, we can see that although maybe in this case it's not material, we should still probably consider it because it has the potential to become material and start actually negatively or positively affecting our numbers. So what are these two terms talking about? Well, let's deal with that exchange gain or loss. That's the easiest one, I think, to people to understand because it's something that you could probably see as you go along. You see, as I'm going to just demonstrate here on the iPad, you can see that if you were to buy something, say on the 1st of the 1st 22, and you were going to spend some money on that one. So imagine that you had to go out there and you had to buy £1,000 of euros worth of materials. Yeah. Now imagine that supplier was really quite, pally with you, or you've dealt with them from a while, and actually they've said that you have 30 days terms or maybe even longer until you have to make that payment. Well, you know the world of exchange rates. That's changing on a daily basis and sometimes hourly basis. So if that's constantly changing, then if you're going to not make payment on this until the 31st of the 1st 22, then that €1,000 worth of goods could be worth something different by then. It either has gone up in value or it's gone down in value. And basically the equivalent over here could be worth something else. Imagine in that 1 month period, it's now worth €900, which means that basically you've now gained on that, haven't you? You've received goods that are worth €1,000 back in the 1st of the 1st 2022. But then when you've gone to pay that item, you now have to pay over less for something that was worth more back then. So you've made a gain on that exchange. You've bought it at a price where it was worth more than you've actually physically paid for it, and you've paid less for that, even though it's the same item where it really should be worth the same, but because of exchange rates, you've now paid less for it. You've made an exchange gain on that. And it's those examples that HMRC want you to understand and want you to be able to show on your profit and loss account that you've gained or you've lost on those particular items. And they want you to do that literally on a transaction by transaction basis. Hence again, if you listen to that video or you watch that video I did on the QuickBooks chap, you will see that actually QuickBooks is making that really simple for you. But it doesn't matter what software you're using, you really have a requirement to make sure that you're showing those exchange rates. So that here, in my scenario I've just shown there, I would have a gain of £100 or euros, or the equivalent of €100 in here as well. Now you only need to show it cumulatively, and it should really be a case of how well you've done against the market in a given time, but you do need to be showing that as well. The other practical bit that I want to talk about is unrealised gains or loss. Here, £28.62. Now the reason that that's come about on this particular one is because if I went and looked at my banking, for example, you can see that I've got $150 sat there. Now if I went to look at my reports, and if I was going to go and do a balance sheet and I was going to put this in a set of accounts, then I would have to show that in pounds equivalent, and my pound equivalent is £83.77. In QuickBooks terms, it's taken $150, it's converted it into 83.77, and you would have to do the same because you need to show all of your elements in pound coins. So if you've got to show what you're holding in pound coins, and you're going to have to do equivalent and multi-currency jiggery to see what that's realized. Now that's all well and good if you had put that figure in there, but what if you've just used maybe QuickBooks as figures, or you've used your currency exchange rates that you've been able to achieve on the market? Because remember, like doesn't matter how good you are at doing exchange or how good you are at making sure you follow guidelines and everything else. What you've actually achieved in an exchange rate is based on who you went with, what payment provider, what day you decided to do it on. That's what's going to determine what your actually exchange gain and losses are going to be. Well, in this case, your exchange gain and loss, or your equivalent of what you've shown as what your GBP equivalent of $150 US in this case, is all going to be based on your trading of currency up until that point in time. And that works, and that's a good way of showing what the equivalent of GBP is going to be. So if I sent £150, for example, how much does that show in US dollars? Well, in theory, that should still be £150 in, you know, if I was to take that straight back again. And in your accounting terminology, that will, you know, you'd want to show £150 sat in that US dollars account. But actually, HMRC want you to restate the figures at your year end. So anything you're holding in US dollars or any foreign currency for that matter, and they want you to restate it based on their values. And they actually produce a list every year of what the values and the equivalent they want to show as the equivalent going through. It's called their spot rate. Now, you've done what you believe that pound coin is going to be. So in this case, £83.77. But if we did that spot rate and we recalculated and it was higher or lower based on that, that's what we're classing as unrealised gains and losses. If we restated, it may not be because you're restating to HMRC's spot rate. Maybe you're restating it because you found a different value of what that dollar equivalent is going to be. And you know that actually you've had a really bad year, or the currency's had a really bad year. And even though you believe there's £83.77 in there, actually, when you look at it, it's much less than that. It's probably only worth £50, for example. Well, you've lost that money. The difference is, though, that you've not realised it yet. You've not physically moved it from US dollars or whatever to GBP. Therefore, you've not actually taken that loss yet. You could leave it there in the hope that it gains later down the line, or it may even drop even further. At the end of the day, you've not actually taken that money from USD to pound coins. You don't actually realise that loss at this point. You can just show them there. So when we talk about unrealised gains and losses, that's us going, well, this is what it should have happened if you had taken that money out of that date. But obviously at that point, you haven't taken it out. So instead of showing it as an exchange gain or loss that's been realised and you've actually physically either gained from it or lost from it, we're going to show this as unrealised so that you can see that actually if you had paid it out, that's what the pain would have been. And that is how we're going to deal with multi-currency for now. Now, comment down below if it's the taxes side of multi-currency you also want to deal with or want to know more about. Make sure you put your comments down below. We're going to be utilising those comment section to decide what our next video is going to be. And we have already quite a few videos planned for this particular channel. So if you need multi-currency answering now, then get those comments down below and we'll then start pushing it up and up and up, and you'll get that video sooner rather than later. But also let us know below, are you dealing with multi-currency at this moment in time? Have you thought about jumping in there? Did you even know about unrealised gains, loss, exchange rates and all that jazz that comes with it? Well, if you didn't, then let us know below. And maybe that means something that we can start doing more content around this, maybe shorts or something like that. Because remember, the whole point of this video is we want more people to know about this, more eyeballs, we want people to be sharing, getting more people into this video. That way, more people are going to understand exactly how multi-currency can help their business. But don't forget, here at Bofix, it's all about we want small businesses not just survive, but thrive. And I really do think multi-currency, dealing with other currencies, dealing with other marketplaces is a great way for businesses to go out there and absolutely thrive. My name's been Aaron Patrick. As always, it's been an absolute pleasure to do this video for you. I'm probably going to more than likely see you in the next video. So bye for now.